This is a short demonstration of the stock's futures program that's capable of using natural laws to make long-term forecasts of stock prices at the New York Stock Exchange. Our understanding of natural growth in competition makes it necessary to shift our attention away from prices, because prices are not competitive variables. Prices are simply not limited resources. We need to look at share volume and dollar value, daily exchanged. In particular, we need to describe the evolution of share volume and dollar value by S-shaped natural growth curves, the so-called S-curves. And once we have S-curve descriptions for the share value and the dollar value, then the ratio will give us the price forecast. Let us take an example of a Dow Jones stock like Walmart. If I type WMT here, we will see an overview of the historical evolution of Walmart's share volume and dollar value. We will fit S-curves to each one of them. Let us begin with volume. Here we must imagine an upside-down S-curve, the tail of which describes the data trend over this range here. Most of this S-curve is outside the pad, so I will eliminate the data we're not going to be using. And here I will try to sketch the S-curve we just imagined with 4 data marks. You can adjust the points until the S-curve appears. This S-curve, this green line, is the first approximation to our answer. We will improve on this by trying to minimize the error, this red error bar, which represents the difference between line and data points. And when this gets minimum, something like this, we go to do the other variable, the dollar value. Here again, we must imagine an upside-down S-curve that comes like this, and the tail of which describes this part of the data range. So again, I will restrict the data range to the useful part. And once again, I will try to sketch the S-curve we imagine with 4 markers. Moving them around makes the S-curve appear. That's the first approximation. And then we improve on this by moving the ball around until the error bar gets minimum. That gives you the best fit. Our forecast should be ready. Here it is. We see the historical evolution of the price and a description of it from our S-curve analysis, that's the green line, which also gives our forecast for the next 9 quarters. The error band indicates the 90% confidence level, which means that 9 times out of 10, future prices will fall with this band. There's a table with the prices and the errors, and you can save a picture of this, like this, for your records to print it later. There you have it. You can buy the light version for $2.95 and be able to analyze only 2 stocks, or you can buy the full version for $49.95 and be able to study all the stocks in the New York Stock Exchange. Whichever you do, I expect it to be profitable.